Traders, I'm Maria Stardup, and this is the review of crypto analytics from FxCo. It's the 14th of December today, Wednesday, and today we will start again with long-term perspectives for Bitcoin and two rally scenarios depending on US inflation data, and then we will get to technical picture of first Bitcoin and then Ethereum. And we will start with an article by Ekaterina Kiseleva and the two scenarios of Bitcoin movements. According to JP Morgan, if the CPI falls below 6.9%, it will trigger a rally in the traditional finance markets, which will certainly have a positive effect on the cryptocurrency. According to the market consensus, the most likely result of year-on-year inflation today is 7.2%, which is above the aforementioned 6.9%. With a value of 7.8%, the index may lose more than 4.5% of its value, which will cause local catastrophe in the markets. And the most likely outcome is 7.2–7.4%, which will lead to a moderate rally on the market and should have a positive impact on the digital assets. But it certainly won't trigger a rally, as most market participants had already priced it in. Then, one more opinion on the point of comparison Bitcoin and gold, who wins, this time the opinion by Goldman Sachs Analytics, who believe that in the long term gold will eclipse Bitcoin, as it is an excellent portfolio diversifier. The banking giant says that the precious metal is less receptive to monetary tightening. Moreover, gold actually has use cases that are not based on purely speculative trading. Nevertheless, Goldman Sachs is ready to invest a substantial sum of money in profitable crypto firms amid the cryptocurrency crash. In May, Goldman Sachs CEO said he was optimistic about blockchain. And one more interesting idea on the point of the upcoming recession, the idea by BlackRock, one of the world's largest asset managers, who warned that 2023 will be a recession year different from other recessions in the past. BlackRock notes that updating the economic configuration requires new ways to interact with the markets. The old buy the dip scenario will not work, as it is necessary to constantly reassess how dynamic policies are creating economic damage. They also stated that they believe that most cryptocurrencies will not survive after the fall of FTX. However, the firm acknowledged that blockchain technology will be important as a tool to help tokenize securities as part of the next generation of markets. Thus, all in all, these opinions reflect the same idea that there will be hard times for Bitcoin and crypto market in general, but still people believe in cryptocurrencies. And now let's get closer to technical picture and the next article by Alexandra Sifantis and the technical picture of Bitcoin. Let's look at the chart. Here at the chart you can see a blue line, which is support trend line, black line is resistance trend line, and green lines are Fibonacci retracements. So Bitcoin has broken the short-term resistance trend line at 17,200. Price has provided a new bullish signal, and we're now expecting to see a test of 17,800 point. Bitcoin hasn't seen these price levels since November 10th. A break above this level would be a bullish sign that could lead to a big bounce towards 19,200. Support is found at 17,000, and as long as price is above this level, bulls will remain in control of the short-term trend. Bulls do not want to see a long upper tail candlestick pattern. They need to keep price above 17,200, and if the level 17,800 is reached, they will need to stay above it. The RSI is making new short-term higher highs, implying that the bullish momentum is strong. Well, let's have a look at the chart for the moment. It's 14th of December today. And what do we see at the chart? So, yesterday, at the beginning of the day, Bitcoin was at the point 17,000, almost 200. Then it went higher, above 17,400. And in the end, in the middle of the day, it went even higher to 17,900 levels, and then it retreated a little, and it opened the day at the point of 17,768, and now it is trading at 17,765. The price is really above 17,200, and even the level of 17,800 is reached. Well, and now let's move on to Ethereum and the article by Ralph Shadlam. So the price of Ethereum rallied and reached 1,350, and at the moment of writing, it was trading at 1,316. It has registered a strong rally, so a temporary retreat is natural. It could test and retest the near-term support levels before resuming its growth. It increased from yesterday's low of 1,240 to 1,350, today's high. And still upside pressure remains high, so further growth is natural, Ralph says. As you can see on the 4-hour chart, the altcoin moved sideways between 1,215 and 1,310 levels, trying to accumulate more bullish energy. The bias was bullish as long as it was trading above 1,215. Now it has jumped far above 1,310 static resistance, but it has found resistance at the weekly point 1,348. So the forecast is following. Breaking and stabilizing above 1,310 signals strong bias and upside continuation. This was seen as a long opportunity. Consolidating above this broken level may announce further growth. Well, let's get to the chart for the moment. So, again, like Bitcoin, yesterday, Ethereum was at the beginning of the day at point 1,265, then it went up. It reached 1,336, It opened today at point 1319, and now it is trading at 1321. So it seems like it did break the 1310 and stabilized, probably. This is all for today, for the moment. We'll see each other tomorrow in our next review. I wish you profitable trading and fantastic day. See you soon.